this would be the open at 12 o'clock, and the close of this candle would be at 1 o'clock. Everything else stays the same. The low is the lowest point that candle got to during that hour. The highest point that candle got to during that hour. So now you should have a good idea of how to read a single candlestick. What I want to do next is go down to a chart and actually talk about the psychology behind a candlestick and what the size of the wicks and the bodies can tell us about the potential direction that a particular asset is likely to go next. So let's head down to a chart and do that. I'll see you there. Okay, to start off with, we're on a chart of Bitcoin. As I said, this is going to be the same across the board: stocks, crypto, and Forex. So on this crypto chart, just as a quick recap, on this green candle right here, we are currently on the daily chart of Bitcoin. How much time passes during this green candle? This represents a full 24-hour or daily period of time, right? The open of this candle would be the bottom of the green body. This little bitty wick towards the bottom would be the low. The little bitty wick towards the top would be the high. If I say little bitty again, please punch me in the face. And this area at the top of the body is the close of that candle. So this represents a day when buyers were in control because we finished above where we opened in a big way, and leads me into the psychology of candlesticks. So we're going to talk about three different candlesticks psychology wise. We have the momentum candle, we have the indecision candle, and we have the long wick candle. Let's talk about the momentum candle first, since we're here on this chart. So as for a momentum candle, the candle you see right here, does it look like it has a lot of momentum? Well, the way you can tell is how big the body is compared to these small wicks. Because of that, you know that this was a moment of time. This was a day that bulls had control nearly the entire day. So what I want you to think about it as, psychology wise, is think about it like a battle between the bulls and the bears with each of these candlesticks. Bulls, by the way, are buyers, bears are sellers. So think about it as a battle between bulls and bears. On a day like this, that means that at the start of the day, bears tried to push down just this much, barely any, before bulls took complete control, pushing the market higher and ending near the top or near the high. And that insinuates or lets you know that bulls, at least for that day, were in control and may end up being in control over the next day or 2 days or 3 days. Let's see what happened in this case. As you can see, that represented what was coming next in this next bull run here on Bitcoin. And an important note is that all about to discuss mean absolutely nothing if they are not either a swing high or at the end of a pullback. If they happen in the middle of nowhere, that's not something you really want to pay attention to. That was just a quick side note, but now let's take a look at a bearish example of a momentum candle. Here we have a bearish momentum candle. And again, let's think about this from a psychology side, since that's what we're discussing right now. Think of it like a boxing match. At the start of the round, you know, the opening bell rings. They open up, the bull or bulls push up a little before bears finally just take complete control and end up closing near the bottom of the low of this candle, insinuating that bears had complete control during this specific day. So that's a bearish version of the momentum candle, and kind of how you should be thinking about it like a battle instead of just like candlesticks on the chart. They're not just candlesticks. They represent every decision made during a 24-hour period by all market participants, including retail traders and institutional traders alike. So that's an example, as I said.